Good day, everyone. My name is Michael Florentiades. I'm the Chief Economist here at xm.com, and this is your European Open briefing for Friday, December 8th. Let's see what are the key points to watch today. The US dollar has posted significant gains ahead of today's employment numbers. There was little catalyst for the dollar's move, but still it's there. Sterling was boosted by the deal between Britain and the EU, but not by so much against the US dollar. Maybe its strength is more evident with other currencies. We had a positive Japanese third quarter GDP revision. Chinese trade data were also very good, a wider surplus they showed. And for the day ahead, of course, we have two major pieces of US data, the November employment report and later the University of Michigan preliminary consumer sentiment. Now, as we said, dollar strength is the main feature of today. Euro-dollar made a more than 2-week low, very comfortably below the 118 level for euro-dollar. Dollar has been helped by the passage of a spending bill by Congress, which is preventing a US government shutdown this time, so no drama surrounding a possible shutdown of the US government, of the federal government. We also had somewhat strong data yesterday in the face of low jobless claims, but by themselves I don't think those events were enough to propel the US dollar higher. I think maybe technical factors helped. Dollar yen, as you see, comfortably above the 113 level. It's now eyeing the 113, 114 area. It's a 1 month high more or less. Now this rally versus the yen took place despite a positive data revision for Japanese third quarter GDP and a relatively hawkish Kuroda. And we must say that there has been positive risk sentiment which has depressed the yen today. Euro-pound has dropped to a 6-month low, a significant development for that pair. I think because we have the first positive sign of good progress, enough progress on the three key issues of the Brexit negotiations before we move to the main topics of Brexit. That is what the Irish border is going to look like after Brexit takes place, the rights of EU citizens already in the UK, and the divorce bill, or what the UK owes to the EU. This means we can now progress, negotiations can now progress to trade, very important chapter, of course. The transitional period, which is very key for businesses, for planning ahead, what is going to happen, because next year in 2 years' time rather, we have the March 29th deadline for Brexit. And we also have the topic of long-term relationships between the UK and the EU bloc. So I think now the chances of a cliff edge, no deal Brexit are lower. We have seen some progress, things are moving ahead, so it's definitely positive news. Now, and by the way, this may also help general sentiment with the pound, to see how the pound is going to progress and whether it's going to rally further. If there is more positive news, we could see some more upside to the UK pound. On to the economic calendar for today. As we said, the Japanese GDP was revised to 0.6% from 0.4%. That was a significant revision. We had a capex also revised much higher, so that was a big positive for Japan. We also had current account surplus positive. Bit disappointment in for German trade balance, slightly lower trade surplus. We have exports dropping a little bit rather than rising a little bit. Imports fairly healthy. And we have a little bit later a UK industrial output. It's supposed to be flat month on month. Also the goods trade balance for the UK. Now, earlier today we had the Chinese trade data, better than expected, wider surplus than expected. In US dollar, around 40.2 billion from 35 billion. We have both exports as well as imports growing rapidly. So exports mean that world growth, world demand is doing very well. Imports show that Chinese domestic demand is doing very well. So good news on both fronts. Now, the most important statistic of today, the most important report of today, of course, the US employment report for November. We are expecting 200,000 non-farm payrolls or new positions, new jobs in the US, net addition to jobs. We also are expecting a stable unemployment rate at 4.1% and average hourly earnings, perhaps a very most important figure, one of the most closely watched figures for monetary policy, to come in at 0.3% month on month. So a little bit later, University of Michigan preliminary consumer sentiment to rise to 99 from 98.5. So a very busy day ahead. It's going to be quite an exciting day, and we have already seen quite important moves. So thank you very much for watching and have a great day.